Good morning, everyone. Welcome, everyone. We had a couple of late joins, so we appreciate you today. I realize that some of you may be joining. We're going to go ahead and get started. We're having today's call regarding the market and M&A overview, and we're just looking for great information today from our panel, which will include Charlie McElravy, who is our lead advisor on the sell-side practice. He's a CPA and attorney and provides a wealth of perspective in a variety of arenas. Been around a long time, seen a lot of deals. We also have Jim Farrell on the line with us. He is our head of business development. Jim works closely with sellers and as well as buyers to really find alignment there and find a great fit among the things that buyers are looking for today. We also have with us Clark Griggs, who is the founder and president of Griggs Wealth Management. And Clark is here today to provide some really helpful commentary and understanding on the markets and how it relates to the data center space. So without further ado, we're going to go ahead and dive right into the presentation. Clark, I think it's helpful to have you set the stage. Just what are you seeing in the markets right now and provide a broader economic outlook?
Thank you, Joy. As we look at the markets moving forward, we're always doing it for an eye on how it affects our current clients, especially who are business owners, those clients that are business owners in the space. And there are several factors that always come together: the combination of the market, interest rates, and what's happening overall. So right now we have a very interesting time economically. We're still expecting the U.S. to grow at about 3% this year. And as a result of that healthy growth, the Fed is saying we are no longer going to buy bonds in the market. So their bond buying program is supposed to end at the end of this month. And as a result of that, we now can start to forecast interest rates just a bit. The current convention is that we may see interest rates increase 1% to 1.5% still in 2015, and that's where we were the last time we were with you guys. And we may also see 1 to 1.5% in 2016. And every time we start to see the U.S. move toward higher rates, something happens in the international landscape. And what we're dealing with right now is that we have the Eurozone contracting. They're looking at only growth of 1% there. We have China potentially slowing down. And we have other factors. We have some unrest, obviously, in the Middle East. So as a result of those things, we still think it's a very great, it's a very fair and positive environment for owners.
That's great. So as we just look at how that relates to data centers, talk through that a bit.
Surely. Well, one of the things that we look for, whether you're a strategic buyer or financial buyer, obviously, is can you get access to capital at a reasonable rate? And we're still seeing that. I know we'll talk about other things here in a moment. But right now, let's just look at what's happening from a performance perspective. And we're still seeing that the markets are somewhat resilient. We've had several days here of the markets being up after what was a well-needed correction in the market. Overall, we saw the markets drop about 6%. And there's a distinction between a correction and a bear market. A correction actually is a fairly deep drop of 5% or more. A bear market ensues at about 20%. So most Wall Street seers and most folks who really follow markets feel like this was well needed. And what I'm fascinated with when we get into a correction is how is the data center universe performing? We view the data center still as a hybrid between a REIT and a tech stock. And so the S&P 500 year-to-date is up about 4.6%. And when we start looking at telecom services are outperforming. They're up 5.8% on the year. And information tech is up 8%. But the REIT equity index for the year is still up 19%. So there is a tremendous amount of interest in the REIT space. And maybe even more importantly is how did the data center stocks perform during this most recent correction? So just to give you a small composite, Joy, we look at companies like Digital Realty, DuPont Fabros, as well as Equinix. And what's interesting is that we were very, very focused on trying to find an entry point into Digital Realty, found that they corrected about half as much as the market. DuPont Fabros as well did very well relative. If you look at their particular performance and charts, they held up exceptionally well. And then we had a real head fake with Equinix on Friday because as a result of their REIT conversion, they're giving out $7.50 a share, and the stock was up 7%. So overall, we found that data center stocks did very well during this correction, and again, that bodes well for the space, investor confidence, and the great timing and optimism that the street has for data center stocks.
Sure. Well, let me ask you to do a little bit of translation, since many of the folks out there who we work with and talk with each day are independent data center owners, smaller operations, certainly not the size of Digital Realty or Equinix.
Sure.
So how does this information translate, maybe just summarize how that could translate to that independent owner?
Oh, most definitely, because what ends up happening is that a majority of investors, whether they be large or small, whether they're looking at investing in a publicly traded stock or whether they're interested in buying a $1 to $5 million business, will be watching how these types of companies perform as an indicator of their timing. And so if I'm looking at spending, let's say, $2 to $5 million of my own private money, I'm going to be very interested in how resilient data center stocks are, because that is an indicator to me of confidence in the space.
Thanks. Sure. So as we go and look at M&A activity, which is certainly a hot topic of conversation right now, let's talk through that a minute.
Oh, very quickly, 2014 is showing up as a phenomenal year in M&A. In particular, telecom M&A. In fact, some of the numbers we're looking at are telling us that in the first 9 months of the year, we've had M&A activity already that's reminiscent of 2007. So this will end up being an incredibly strong year for M&A. And we can go back, we can look at a lot of the things that have hit headlines that we're familiar with, both Comcast, Time Warner, AT&T, DirecTV, both north of $40 billion. Even the consolidated deal, on a smaller level, we're seeing a lot of interesting activity. So, again, there is a connection between the public and private markets and what you potentially see in terms of a trickle down. So, again, these are highly, highly impressive mergers that we've seen. And, of course, I'm leaving, quote, unquote, the best for last in terms of the Zayo IPO. I was just looking at something on Bloomberg just discussing dark fiber, and it was an education about dark fiber. So Zayo's deal came out, and I have to give them credit, and to come out in a market like last week that was so volatile and risky, and an IPO, I thought, showed a lot of, again, Wall Street confidence in both the dark fiber space as well as the data center space. And Zayo came out at $19 a share. The original pricing was $21 to $24. Companies will do that sometimes when the market's a little weak. And the stock was up 16% the first day of trading, and continues to be strong. So again, they ended up netting about $280 million. And again, for private owners or smaller companies, the takeaway is this is a prime time to acquire and also figure out how to have liquidity events to pay off debt and position yourself going forward. So a very, very positive event for the space last week.
I'm going to turn for a moment to Jim Farrell and ask you, Jim, just recently, obviously we've seen quite a bit of growth in Zayo, both organically and through acquisition. What did you see over the past year? What are your takeaways from the Zayo IPO?
Sure, Joe. I would say that Zayo really is focused, as Clark was saying, in the dark fiber space, but also in the co-location space. They have in their Z-Colo business unit over 27 data centers combined, and they've really done a good job to acquire key strategic assets, bolt them together very quickly, and sort of get them cash flowing. So that's been their stock and trade the past 7 years, and really the model to pull together assets across the country and internationally as well, most notably the NEO acquisition, a Paris-based fiber provider this past year. And so they're very good at taking those assets, putting them together, and making them really cash flow quick. So that's what they've been doing really for the past 7 years, and that's led up to a successful IPO.
Sure. Well, as that sort of parlays into this part of the conversation. And Charlie, let's hear from you now. In talking about what we're seeing, I think that this list you're seeing in front of you is a pretty powerful list. And my question to you is, what are you seeing as the value drivers in some of the M&A activity that we're seeing on the screen right now? What are the value drivers there?
Oh, thanks, Joy. I think that on a company-by-company level, virtually all of the acquired companies are showing strong revenue growth and strong EBITDA and a prospect for more. So the acquiring companies, feel confident that they can pay up a little bit and not get burned. And then as you go down even further, especially in the data center business, the data storage has been, the amount of data stored has been doubling every 2 years for the last number of years, and that doesn't seem to be anywhere near over. So that there's a lot of demand out there for data storage. So we're just seeing a lot of growth in that space. Many entrepreneurs started data centers, especially in smaller and medium-sized markets. And as the bigger companies are running out of room to expand, there's a number of private equity and strategic roll-ups that are going on because there's just a lot of faith that the demand for data storage is going to continue to grow.
Sure, and can I take that to mean you expect that M&A activity is going to continue at the same rate that we've seen in recent history?
Well, you never know when it's going to stop, and there could be something on the horizon that nobody sees that could bring everything to a screeching halt. But, looking through my crystal ball, at least, I expect it to go on at least another year and possibly another couple years. Having said that, if anybody, listening is considering selling, it's always easier to sell when things are growing rather than things are declining because it's important to leave something for the buyer. But I don't see this ending I think we got at least another year of this, especially in the data center space and in the telecom space in general as well.
Sure. Well, getting back to Clark, what sort of clues, is the middle market leaving us that may even give more weight to what Charlie was just saying about whether the trends will continue? I'm sorry, we might have lost Clark.
Joy, can you hear me?
Clark?
I'm sorry. Yes.
Oh, yeah, sure. No,
apologies. Piggybacking on what Charlie said, I think he's right on target in terms of the time frame because we can overlay that with the interest rate picture, and that's a fairly good barometer. And also, there's that stock market correlation between sales and the market. And so, as a result, I think what may happen in the middle market as well as in public markets is right on time in terms of 1 to 2 years. There are some interesting statistics that have come out recently. We've looked at 1 or 2 reports that are showing us that actually we're having a slight decline in deal volume in the middle market. One report showed us a 13% decline, another one 19%. And while I don't view that as a permanent fact set, we're looking at month-over-month data, it's just simply something to be aware of. And from an EBITDA multiple standpoint, we're still seeing financial buyers, the multiples are higher at 9.6 times roughly than on the strategic side. So you've got great multiples, and from the declining side in terms of just the deal volume or the number of transactions, it's just simply something we're watching as a data point right now.
Sure. So Jim, let me ask you this. These multiples that we're seeing sort of on a broader scale, are we seeing comparable multiples in the data center space?
Yes, Joe, I think we're seeing a similar trend into Clark's point when you're dealing with financial buyers, and oftentimes they'll trade a little bit higher than a strategic buyer would. For obvious reasons, the financial buyer is looking to, within a compressed time frame, leverage assets in a way that allows them to have an exit event where the strategic buyer is looking to opportunistically grow the business and grow revenue for more of a long-term play. So there's a little bit different strategy there, but generally speaking, we're seeing similar types of multiples.
That's great. So, Jim, I'll stay with you for a moment. You talk with, buyers every day, and, clearly there's, some trends here that we can learn from. Talk with us a little bit more about what you're seeing in terms of their confidence level and what you're hearing from them on a daily basis.
Sure. Well, there's a couple of different views that I find most often with CEOs. Confidence in general is up, and that could manifest in one of two different ways from what I usually see. And in some cases, the CEO confidence, it manifests in a way that has them driving growth and investment in their business. And in some case, Charlie made this point earlier, the ideal is to sell on the way up. And CEOs that are closer to an exit event, especially for smaller businesses, they're recognizing that maybe their original plan was a 10-year plan or a 5-year plan to go ahead and exit and have that strategy executed. Some of them are moving that up a bit to be opportunistic and taking advantage of the cycle that we're in right now, because if we move outside of the cycle, and it's hard to say, of course, what degree of fluctuation we can anticipate, but I guess the point being is if we miss that cycle, or if the CEO principal misses that cycle, then they're going to have to potentially wait, another 5 years, 10 years, whatever have you. So I see the confidence up in general, and in some cases it's compelling CEOs to move more quickly to an exit. In some cases it is compelling a CEO to be more aggressive and actually acquire businesses and grow their own business, both organically and inorganically.
And Clark, I'll just ask you a quick follow-up. Are you seeing sort of the same, buying confidence in markets at large?
Overall, Joy, yes. And I think Jim nailed something when he talked about how for a lot of leaders and CEOs, there is some concern about how some of these windows of opportunity are becoming compressed. There actually is some research out there, there's some thought leadership around how financial markets overall are changing with a combination of technology as well as liquidity and the amount of capital that's available, and things now happen and get deployed a lot faster. So if you're a business owner or a data center owner, one of your concerns right now, potentially should be how quickly can we mobilize in the event of a shifting environment. And whereas it's great to have 10 years or even 5, there are times like in 2008 when things change at the drop of a hat, and it's very helpful to be teed up. So the answer to the question is yes.
So, Clark, as we look at all of this and sort of put a punctuation mark on this part of the conversation and, really what it means to these independent data center owners as they look at the markets and what they're seeing there.
Sure. Well, if I'm an independent data center owner right now, I'm looking at the fact that we've had a highly successful IPO in Zayo, and what that tells us is that the time is right. The time is right to access capital. We've got a very strong M&A market. The middle market numbers, while being still very strong, may be showing us that there is a little softness occurring. Keep in mind, that's in the middle market, whereas in the public markets it's still strong. So again, that's something worth watching. And we have a rate picture that will, in the short term, maybe not change that much, but in the next 12 to 24 months could very well change. So if I'm a data center owner, I think it's a great time to start really becoming clear about my strategy. And in particular, if I am looking at exiting, I think there's a window here that could be potentially short. So all these tea leaves actually are highly positive for the most part, but it is a call to action.
So, and Jim, I'm going to quickly insert a question to you here and pose it this way. Let's say if an owner is hearing this information right now and thinking to themselves it might be time to act, what is the average amount of time they can expect a process might take at this point, since what Clark mentioned is, there's a window here, but what does their timeline look like? And maybe just summarize that for us very quickly.
Sure, Joy. I would say that if you're contemplating, CEOs that are contemplating an exit again, be it speeding up the exit plan in order to align with the current climate and opportunity, or if it was something that is a plan they're just putting together, I would say that you, generally speaking, you want to anticipate about 12 months for the process, and it could go quicker than that, depending on a number of things. The facility itself, I mean, the most desirable that we're seeing is really kind of the Tier 2 and Tier 3 markets across the country, and obviously cash flow positive businesses. Those are the most, I guess, desirable or the highest demand that we see for those type of businesses. So from beginning to end, it generally is about 12 months. It can take a little bit longer, depending on how much the executive team participates, depending on the shape of the business and the books and all of the details that really go into a transaction like this. And in some cases, if it's the right business in the right market, and it's well run, and the books are clean and so forth, it could be a very quick process of 7, 8, 9 months. So it really does vary, but I would say that at a high level you anticipate about a 12-month process.
That's helpful. Thank you for that, Jim. And Charlie, as Jim just described, I think there's, probably a little bit of uncertainty or potentially lack of awareness in owners as to what this process is and what it looks like. But maybe you could even shed some additional light on what cycle we're in, or what stage of the cycle we're in right now in the data center space.
Joy, I think that we're still in the expansion stage, and I can't tell you where along that steep part of the line we are, but I think there's still, as I said, more and more demand for storage, data storage. There is more and more merging of IT, managed services, cloud, and space and power. So all that is helping fuel demand. It's bringing more and more buyers who have money into the process. So I think we're still in the expansion part of this. And I think ultimately, when somebody decides to sell a business, it's probably, the timing's interesting, but if you're ready to take some chips off the table, you're ready to take some chips off the table. And there's a lot of family, personal decisions that go in there. Some people are afraid to sell because they don't know what they're going to do after they sell. But our experience with all that is that there's always something else to do and always something else to find. So I think this is an excellent time to sell. It's not required. What you don't want to do is be in that, certainly when the market's going down or really in the mature stage to sell. I think some of the risks are, as the data center business gets more and more national, somebody who is in, for instance, Lexington, Kentucky, has a data center there, there's no real reason why you can't get your cloud from somewhere else if you're in that market. So it's just not, as a business, there may be more risk in the business as the business becomes more national. But to go right back to it, I think we're still in the expansion stage, and there's more growth on the horizon.
Well, and Clark, I'm going to lose you back in here for a question, because you've actually dealt with business owners well beyond the data center space. More just, I'm asking this just to better understand the mindset of the business owner, and that's to say, what is the first step for them as they're looking at the market picture, looking at the stage that we're in data centers? What should they be thinking about right now? What steps should they be taking right now?
Joy, thank you. Thank you for that. I'll put my financial planner hat on for a brief second, and I think Charlie actually alluded to this in our last call. For a data center owner or any business owner, there is quite typically in their mind a number. There's a specific after-tax number that they think they need, and that could be a combination of both the proceeds from the business sale, other investments they might have, whether it's the stock market, real estate. So, quite often a great approach to figuring out and starting this process begins with identifying what your real financial need is after the sale. And as Charlie mentioned, what we find is that many of our owners go on to actually buy other businesses or invest in other ventures, real estate related or other, but that's a great starting point, Joy. I think that there's a lot of anxiety and tension that comes from, okay, what do I do? But as we get into that growth driver conversation that you mentioned and other things, if we can start with a number and identify some of the concerns, the tax considerations, other things that might relate to the sale, that's a great place to start.
Very helpful. Thank you. That is it for today, and I truly appreciate everyone's insights and information. And thank you all. And if anyone would like a recording of today's webinar, you're welcome to contact us. Feel free to contact Erica Krieger, and she can help you get a recording of today's webinar. Again, my many thanks to Charlie McElravy, Jim Farrell, and Clark Grid for being our panelists for today's discussion, and we look forward to next quarter's webinar. Thanks, everyone.
Thank you, Joy.
Thanks, Joy.
Thank you, Joy.